earlier this week. Druckenmiller says, I have bought stock today. That's a big voice of support for a stock that is very hard hit today, including by these allegations. General Electric shares are still down about 12%. They are under $8 at the moment.
All righty, coming up, the bond market has been flashing a major recession warning, if not an infallible one. But what are economists saying? A rapid update on the economy is next. And retail sales were better than expected. Walmart reports strong results. Will the consumer hold steady? And retail's problems are retail problems more about the decline of the mall? Our Lunch will explore that and more when we return after this.
Family taco night is a heartburn night you can plan for, but surprise pizza at the office means heartburn you didn't expect.
Stocks are getting whipped around thanks to the trade tensions. A top analyst says there's more pain ahead. We'll have that for you. And speaking of trade, one U.S. company was set to become the first ever American rice exporter to China. Now that deal could be on the back burner. All this when Power Lunch returns.
And now, the latest from tradingnation.cnbc.com and a word from our sponsor.
Many traders like to watch technical patterns, and one of the most popular ones is called the Golden Cross. The Golden Cross is where the 50-day moving average moves up through the 200-day moving average. And while this pattern is not intended to get you in at the very bottom, it can often be an effective entry point for a stock or ETF that's in an uptrend. I'm Randy Frederick, and Schwab is the better place for traders.
Okay. Bounced a trade idea off my firm. Same old lines. I mean, show me some technical indicators, proprietary research, something.
That's why I like Schwab. They help look out for your blind spots.
Come on, Johnny, you got this, buddy.
Speaking of blind spots,
It's time to trade up. Schwab helps you see the full picture with powerful intel and trading specialists who get it. All for just $4.95 per online equity trade. Expect more from your firm. Schwab, the better place for traders.
Land Rover, above and beyond.
I feel like I've been on a diet my entire life. I even cut out bread and pasta for a day. And then I tried Noom.
It's different. It's something that I can actually live with. I wouldn't even call it a diet.
It just clicked. Visit Noom.com and lose the weight for good.
Music that moves you. Just one part of the best cardio machine on the planet, Peloton.
Hey, you want a piece of me, huh? You ain't trying to kill me.
Jay Leno's Garage, season premiere August 28th. CNBC, get yours.
Hi, I'm Hanno. I created Gabi because most people overpay on car insurance. Gabi is a free tool that saves you money by finding the best deal. Gabi users save more than $800 per year on average. Go to Gabi.com and stop overpaying for car insurance.
These folks, they don't have time to go to the post office. They have businesses to grow, customers to care for, lives to get home to. They use Stamps.com. Print discounted postage for any letter, any package, anytime, right from your computer. All the amazing services of the post office, only cheaper. Get our special TV offer, a 4-week trial plus postage and a digital scale. Go to Stamps.com/try and never go to the post office again.
At Credible.com, we've helped thousands of people find great rates on their student loans. In 3 minutes, get actual pre-qualified rates from multiple lenders. Find low rates without hidden fees.
Visit Credible.com to see how much you could save.
Welcome back, everyone. I'm Sue Herrera. Here's your CNBC News update at this hour. Democratic presidential contender Pete Buttigieg calling out Congressman Steve King for King's comments on rape and incest. In Iowa on Wednesday, King questioned whether humanity would exist if not for rape and incest.
Well, it's extremely disturbing, and I would think anybody who had said something that extreme would resign. But then again, I doubt that he'll actually do it, so we're just going to have to beat him the old-fashioned way. Thankfully, there's a terrific candidate in J.D. Schulten, and I think voters in that district are looking for a change.
Tiffany is hoping to reach a new customer base with a new jewelry line for men. This fall, the luxury retailer will launch its first comprehensive men's collection, including necklaces and bracelets. Prices will range from $200 to $1,500. And a pair of handmade Nike track shoes from the 1972 Olympic trials has sold for $50,000. Dave Russell says that they were just sitting in the rafters of his garage for a long time. Only 10 pairs were made, and they were sold to a hotel chain that is building a Nike-themed property. You're up to date. That's the news update this hour. Ty, I'll send it back to you.
I think those were the old waffle trainers with the waffle pattern on the soles. Back to the days of 72, Bill Bowerman, Steve Prefontaine,
They were
and more.
called moon shoes.
Oh, is that right?
Yep.
No kidding. Moon shoes.
Moon shoes because of the craters. The waffles created craters.
Oh, how cool. All right, Sue, thanks.
You got it.
You know your shoes.
I do.
All right, let's check on the markets. The Dow fighting to climb back into positive territory. It got there. It is there. Look at that. 23 points higher right now. That's 0.09%. It did drop about 100 points at the top of the hour. That was as the 10-year yield broke below 1.5%. It is back now above that level, as you see there, at 1.525, Kelly.
Just barely. Now, in a tweet earlier this afternoon, President Trump said the U.S., quote, will soon be winning big on trade, and everyone knows that, including China. But the Wall Street Journal's editorial board begs to differ. They've slammed the Trump administration's trade policies, dubbing the potential downturn, quote, the Navarro recession. How should investors navigate the fallout? Let's bring in Larry Glazer, Mayflower Advisors managing partner, and Steve Masuka is managing director of equities at Wedbush. Steve, how likely is recession to you? How worried are you about it, and do you blame trade policy?
Well, I don't think a recession is particularly likely. Trade policy could induce one at some point, but I certainly don't think anything we've seen so far will create one. And also, we've got incredibly low interest rates, which are continuing to go lower, and that's good for the economy. We just went through a quarterly earnings season that went very well, with most companies reporting better than expected earnings. Revenue growth and earnings growth were both good, better than people thought there was going to be.
Okay.
So I think the economy's fine. I don't see an issue.
Larry, what about you? And it is interesting that we're all looking to these falling and negative bond yields as a cautionary sign. If we were assured the economy was okay, I guess we could take that as a positive.
That's right. Look, the turmoil we're seeing in the global financial markets are clearly sending a signal that a recession is knocking on the door. It's just not necessarily knocking on our door right now yet. And I think we talked to a lot of small business owners. They are taking a more defensive, measured approach. If you are in the shoe business in the Boston area, 70% of your imports are coming from China. That's an existential threat. If you're in the lobster business and you're selling lobsters to China, and business is down 70%, that's an existential threat. But you see with the consumer data, in a consumer-driven economy, the consumer did not get the memo on the recession. Consumers alive and well. Walmart, same-store sales,
Right.
earnings
And Larry,
across the board. Lots of good things, Kelly.
It's
Yes.
interesting you say that because, you know, the journal's talking about trade policy, and the big concern, especially from the latest round of tariffs, is that they would more directly hit the consumer. Now, we've delayed about half to two-thirds of those, but still over $100 billion worth is going into effect September 1. Why hasn't there been a bigger impact on the U.S. consumer? Is it because the absolute amount is just not that large?
I think that's right, Kelly. Also, look, the biggest challenge right now for the economy as a whole is the tightness in the labor market. So the consumer feels very assured about their security in that labor market. They know they can get a job if they need one. Kelly, look, it's a global issue. And I think when we look at Europe, we realize how much better off we are than Europe. Europe's 6 to 12 months ahead of us. They've got negative interest rates. They're looking at potential for an infrastructure bill. I think in an election season, it becomes irresistible for politicians not to consider more inflationary measures, more infrastructure spending. It's the only card trick that hasn't been played by our politicians. And in a populist world, that's going to drive the economy. That gives individual investors an opportunity. Playing defense does not mean playing dead. It means looking for opportunities in this volatility, and there's lots of opportunities. Infrastructure stocks have been given up for dead. In Europe, dividend yields are much higher. That's your income replacement strategy for investors that can't get yield here. There's lots of opportunity. A weaker dollar means foreign assets go up in value on U.S. investors' books. So I think we have to look outside the box and start thinking differently in these robo-infested waters.
So, Steve, let me turn to you. You know, a growing economy is built largely on confidence, consumer confidence and business confidence, and both can be very fragile. When the stock market loses a lot of money the way it did yesterday, that gets investors' attention. All the talk of possible recession, that gets consumers' attention. And all of the whipsawing on trade makes it very much more difficult for businesses to plan. Wouldn't you agree, Steve?
Well, let me have a different take on it, Tyler, and that is that I think investors, for certain, should not get so wrapped up in the day-to-day activity of the market. I think the markets can be very, very volatile. I think you have to look at the overall economic facts. Interest rates are very low. The economy's doing well. There are lots of stocks out there with significant dividend yields that investors could buy. You could easily construct a portfolio yielding more than 5% of a whole host of equities. Think of ExxonMobil, Ford Motor, AT&T, all yielding more than 5% right now. So I don't think the market's that expensive, and I think investors should just, play it for the long term.
It really wasn't my question. It really wasn't my question.
Right.
My question really goes to it really goes not to what investors should do, but it goes to how consumers and business leaders may react to unstable conditions that they see.
Well, I think even businesses tend to have a long-term view right now. And yeah, we had a little bit of volatility this week. Our interest rates are actually catching up with Europe and with Japan, and I think that's more of what's going on than predicting a recession. Our interest rates have been the outlier. So I don't think this volatility, to answer your question, will really affect the ultimate decision-making by businesses or consumers that greatly. Just this last week, no.
All right. Thank you, guys. Appreciate it. Larry Glazer, Steve Masuka, thanks for joining us.
And it has been an awful August for the chip stocks. Semis getting slammed on every negative trade headline. The SMH down 6% in August, an even bigger decline for NVIDIA. That one down 11%, and that company reports results after the bell. We will check on the chips. The chips are down on Power Lunch.
The Bond Report, sponsored by PIMCO.
Municipal bonds don't typically get the media coverage that the stock market does. In fact, some people may even find them boring. What they typically do offer is an income that's federally tax-free. Municipal bonds from Hennion & Walsh can give you income that's tax-free, and you have to admit, tax-free income can be very exciting. At Hennion & Walsh, we offer you tax-free municipal bonds from across the country, so you can benefit from tax-free income wherever you live. There's nothing boring about that. If you have at least 10
hours, I was approved for a $75,000 line of credit. Bluevine's line of credit is better than a typical business loan. I have access to cash on demand, and I only pay for what I use. Thanks to Bluevine, I'll never have to scramble for financing again, and I can focus on growing my business.
Get up to $250,000 in the fastest 24 hours. Visit trybluevine.com and apply now.
This is a legal alert. A popular weed killer has been designated as a probable human carcinogen by the World Health Organization. Landscapers, those who work in the landscaping industry, farmers, and heavy exposure residential users where this popular weed killer is used are at risk for developing non-Hodgkin's lymphoma. If you or someone you love has been diagnosed with non-Hodgkin's lymphoma and has been exposed to a popular weed killer, call for more information and a free case review. Call now.
There's golf. And there's the golf lifestyle. Shop with Golf has everything you need to go from the drinks to the links, to the boardwalk and the boardroom. This is the sweet spot for the moments you love and the looks you'll love even more. Because golf's more than a game. It's a lifestyle. Live the lifestyle at shopwithgolf.com.
September 19th, Vice President Mike Pence live at the Delivering Alpha Conference. Just one of the influential names at the most important investor event of the year. Go to deliveringalpha.com to reserve your spot now.
August has been a month to forget for the semiconductors. It is one of the worst performing groups in the market. That's why we have such dark lighting on that screen. It's all dark. It's darkness descending over the semiconductors. One of the victims of the volatility has been NVIDIA, as shares are now down 11% since the beginning of the month when President Trump threatened additional tariffs on China as the company gears up for its earnings report after the bell. Let's talk it through. One top analyst doesn't back down on this. He's an NVIDIA bull. Mitch Steves, equity research analyst at RBC Capital Markets, holds an outperform rating on NVIDIA with a price target of $190. Mitch Steves, thank you very much. I love those travel guides you write, and I'm just kidding. Let's talk about NVIDIA. What are you looking for in the numbers this afternoon?
Yeah, so specifically, we're looking for data center to miss a little bit, probably about 20 million off, so we're somewhere around 650. We think gaming will be in line, 1.3 billion or so. We think they're going to benefit from probably 25 to 30 million probably of cryptocurrency-related Ethereum mining revenue. And then finally, for the guidance, that's where we're ultra focused. We think the expectations are already low for the July quarter, but for the guidance, anything close to in line, I think will be enough, as long as the gross margins are close to 60% for the guide.
So in line is A plus in your view, basically.
I think inline is good enough at this point, considering the results we saw from Intel, the results we saw from the other IT providers, even Cisco, for example. So expectations are definitely low. I would say this is essentially a consensus short into the print. So if that's the case, it usually means expectations are well below where the street is right now.
Why has the stock suffered so much over the past year?
So over the past year, it's primarily been the cryptocurrencies. They talked to doing about 600 million in a total crypto revenue. We had a number of 1.2 billion. And so that number ended up causing a couple of negative pre-announcements back in January and I think the October frame as well was a negative guide down. And so now that you're going off the easier comparisons now, so that's completely out of the model, it should all be data center, core gaming business, switch revenue should come back as well. So I think all those things are going to start to work in its favor now that it's coming off of the lows from the cryptocurrency pull down.
And what happens, Mitch, is the U.S.-China talks just kind of hang there in the balance, and these stocks are left at the whims of them?
Yeah, at the end of the day, you can't really do anything about what Trump's going to do or say or tweet or, try to predict that. I think it's pretty much impossible. So all you can really do is wait for that to eventually get resolved. And at the end of the day, you want to be exposed to the best tech. So NVIDIA, AMD, for example, are two of the highest quality tech names in semiconductors. So if you look over 5 years, you got to take the long-term view. As long as you're bullish on AI, deep learning, and the use of GPUs in the future, you have to be long NVIDIA. So I'm not going to try to predict what Trump's going to do with the U.S. and China. But at the end of the day, as well, for that one, if they actually get a resolution there, I wouldn't be surprised if the stock go up 10% or so.
On NVIDIA, how important is the gaming business to them?
I would say that the majority of the value is in data center. I'd say that 60% of the focus is going to be on data center, and probably 30% on gaming, and the remaining business the remaining business will be about 10%, primarily the auto business. But auto and self-driving vehicles doesn't start to the end of 2020 or so.
Right. All right, Mitch. Thanks very much. We appreciate your time today. Thanks.
Perfect. Thank you.
You bet.
Despite China's edict against U.S. agricultural products, there's one company ready to be the first U.S. company to send rice to China. Contessa Brewer is at Sun Valley Rice in Arbuckle, California, as they wait to hear if the order will be canceled. Contessa?
It's a big if, Kelly. This company, Sun Valley Rice, grows, mills, and distributes rice. They export it to places like Europe, the Middle East, Japan, and Korea, but they've never sent it to China. No U.S. company has, but they want to badly. For one reason, U.S. rice is considered a premium product here. It's short grain, and it's really considered a luxury, an affordable luxury for that middle class in China. And of course, China is the biggest rice market in the world, consuming 36 times more than the United States. Sun Valley founder and CEO Ken LeGrand has spent more than $1 million in 15 years trying to open up the Chinese market. In June, amid this trade war, LeGrand landed his first ever Chinese contract. Despite the retaliatory ban on U.S. agriculture, he's optimistic the Chinese government will permit him to move forward.
The indications that they're giving our customer, which is really who they work with, are all, green lights. We're a licensed supplier. We've been licensed by the Chinese government as a supplier. So, nothing's off track there.
The harvest ripens at the end of September, and if this deal remains a go, the first shipment will be tiny, only about 2% of what Sun Valley ships in, say, a week. But the potential here, the U.S. rice industry is a $34 billion industry, and the profit margins are slim. Ken LeGrand tells me 3 to 5%. He's hoping in China he could double that profit margin, but of course that likely depends on a trade truce. Kelly, Tyler.
All right, thank you very much, Contessa. We appreciate it. In Arbuckle, California. Just over an hour left in the trading day. Could get busy, folks. Much more on the markets coming up after this.
A way to relieve my constipation that's both gentle and fast. New Dulcolax liquid works naturally with the water in my body to provide gentle relief in as little as 30 minutes. New stimulant-free Dulcolax liquid puts you comfortably in control.
Attention Medicare beneficiaries. The Center for Medicare Services has officially authorized new benefits Medicare Advantage plans may include. Plans may now include private home aids and rides to medical appointments. Most plans also include dental, vision, hearing, and prescription drug coverage. To get the benefits you deserve, call the Medicare Coverage Helpline now.
Hi, I'm Joe Namath. I called the Medicare Coverage Helpline, and they instantly advised me that I wasn't getting all the benefits I deserve. Coverage for private home aids and rides to medical appointments. If you want to find out what you deserve, call the number on your screen now. It's free. You'll be happy you called, I guarantee it.
Call to see if you can save money and get more benefits now. Don't delay. Call now. It's free. Call 1-800-548-2837. That's 1-800-548-2837 now.
This is a legal alert. A popular weed killer has been designated as a probable human carcinogen by the World Health Organization. Landscapers, those who work in the landscaping industry, farmers, and heavy exposure residential users where this popular weed killer is used are at risk for developing non-Hodgkin's lymphoma. If you or someone you love has been diagnosed with non-Hodgkin's lymphoma and has been exposed to a popular weed killer, call for more information and a free case review. Call now.
I don't know what's going on. I've done all sorts of research, read earnings reports, looked at chart patterns. I even built my own historic trading model.
And you're still not sure if you want to make the trade?
Exactly.
Sounds like a case of analysis paralysis.
Is there a cure?
TD Ameritrade's trade desk. They can help gut check your strategies and answer all your toughest questions.
Sounds perfect.
See, your stress level is here, and I got you down to here. I've done my job.
Call for a strategy gut check with TD Ameritrade.
Delivery app? If you want it all, you can get it all. Grubhub. Restaurants you love, delivered.
Welcome back as we watch these markets here. The main news of the afternoon has been what's happened in bond yields. The 10-year interest rate, the all-time low from there, 1.318, and the 30-year.
And look at the 30-year below 2%. I heard Mohammed El-Arian earlier today say something that was, in some quarters, inflammatory. Now is the time to load up and do a big infrastructure project. Yeah. I mean, to me,
was accused of fraud. Coming up exclusively, we'll hear from a board member, the chair of the audit committee. No less, 59 minutes left to go. So much to discuss.
So much to discuss, Wilfred. I'm Morgan Brennan in for Sarah Eisen. Let's take a look at what is driving the action today. Conflicting tariff news as China and the U.S. attempt to set the terms for trade deal progress. Retail sales coming in stronger than expected this morning. Meanwhile, opposite signals from the bond market with yields dropping, sparking concerns about the economy. We have got a full team coverage of all of these key stories that are driving the market action, from New York to Washington to the CME in Chicago. Let's start with Bob Pisani, though, who has been tracking the volatility from here at the New York Stock Exchange. Bob. Again, 10-year yield moving the stock market middle of the day. Take a look. We've been overlaying this pattern for about a week now as the 10-year yield moved below 1.5%. Some sell programs kicked in. That was just prior to 2 p.m. Eastern time. And the markets recovered as the 10-year again moved over 1.5%. That's the key mover of the markets the last 2 weeks. Two notably weak sectors today. First, transports. Problem all month. Many of these down double digits, but logistics and trucking companies like J.B. Hunt, Ryder, airlines like American, FedEx, all weaker. All of these are down double digits just in the month of August. The other retailers, I know Walmart's helping consumer sales, but the big retailers continuing to get slammed again today. Macy's, Gap, L Brands, Kohl's, all down 2 to 4%. And look at Gap, down 7%. Right now, energy also weak today. Guys, back to you.
Bob Pisani, thank you very much. Let's get to Kayla now for the latest on trade. Kayla.
Well, Wilfred, the U.S. and China continue to be at odds over a deal and when it would happen. In a series of missives, the Chinese government says it will retaliate in September if the U.S. puts on new tariffs, that Washington should not offer advice on Hong Kong, even though Trump has been tweeting that the U.S. must meet Beijing halfway to reach a deal. The president, meanwhile, says a deal will be on U.S. terms, that President Xi should simply meet Hong Kong protesters to settle their concerns, and that the U.S. will soon be winning big on trade, without saying when or how those two sides would get there. Morgan?
Kayla, thank you. Shares of Walmart are higher on strong earnings results today. That's helping power the Dow here. Let's get to Courtney Reagan for more. Hey, Court.
Hey, Morgan. So Walmart did beat the street with its second quarter earnings, revenues, and U.S. comparable sales. U.S. net online sales also up 37%. That contributed about half of the 2.8% U.S. comp sales gain. The 20th quarter in a row that U.S. comp sales saw growth. Walmart also upping its forecast for earnings, revenue, and comps for the year, and that accounts for tariffs coming in September and October. Analysts say the retailer is benefiting from a strong U.S. consumer, but they also have to give a lot of credit to the retailer's management for all the strategies they've employed to leverage stores and digital together. Morgan?
Courtney, thank you. While we have you, we also got July retail sales this morning. Tell us about those numbers.
Yeah, so even with other economic data points that are sending us some warning signals, this one is another indication that the U.S. consumer is strong. So retail sales grew 0.7% in July from June. So this is a month-over-month number. Stripping out autos and gasoline, retail sales grew 0.9% from last month. So July actually marks the 5th straight monthly gain and the strongest 5-month growth rate for this since 2005 to 2006. Non-store retailers, so if that's a lot of online players, the strongest group of 2.8%. Makes sense, a big boost from Amazon Prime Day that happened in July. Restaurant sales up more than 1% in July from June. Electronics up almost 1%. Department stores, too. This is a tricky one. This is up 1.2% in the month, even after we saw Macy's report that disappointing quarter. But remember, the Commerce Department marks department store sales down 4.7% when you're looking year over year. And that's, of course, how we look at a lot of these earnings reports. Back over to you, Wilf.
Court, thank you very much for that. Yeah. Now, the 30-year yield dropping to a new record low today. Rick Santelli has more on the extraordinary moves we've seen in the bond market once again today from the CME in Chicago. Hey, Rick.
Yes, Wolf. As a matter of fact, even great retail sales trumped by headlines out of Europe earlier today, foreshadowing their September 12th meeting with a stimulative surprise. Intraday 30s, ignoring all the data points, dropped under 2% where it still sits. Bob is right. 2-day at 10s, we were down to 147, and we've bounced. But the bounce at 153, still down 5 on the session, and finally booms, minus 71. There's a long time between now and the ECB meeting, but even Mexico running to the party, cut rates for the first time in 5 years. Wolf, back to you.
Rick, I've been listening to your commentary all day and agree. I think that low of the session close for the German 10-year Bund was related to the commentary from ECB member Rehn. But Do you really believe that they would go ahead with a big stimulus in the final meeting before Christine Lagarde takes over the reins? Surely they'd wait for her to come in and set out her stall herself.
You know, these guys don't really care if they do or not. They have been sent messages before. They front run, and not in an illegal way, and this is a global phenomenon, and they are piling in. Greater fool theory. They pile in, the ECB does more stimulus, they get relieved by people behind them buying more. All I know is all these hints and previous pre-meeting hints have been on the correct side of history. I can't tell you the answer, but I can tell you many global traders certainly do believe that.
Rickster, as always, thank you very much. Now joining us for the full first hour of the show, Stephanie Link from Nuveen, a TIAA company. Excuse me, Stephanie, great to see you as always.
Thanks, great to be here.
So how do you sum up today's market moves?
Two stocks, Walmart versus Cisco. We've been saying all year long that the consumer has been strong and been the engine of growth in the economy versus global growth slowing down, particularly China. And this was completely the case with both of these stocks today, right? I mean, Walmart did a lot of good things that, you know, internally to actually have good results, but the consumer traffic was great. Same-store sales, two-year basis, 7.3%, really good showing. Cisco, on the other hand, China was a big problem for them. That was one of the reasons why they actually had to lower guidance. So it's like the tale of two halves, right? You want to be involved in the consumer, and you probably want to just be careful on the cyclical side of things.
Let's add in David Zervos, Chief Market Strategist at Jefferies, to discussion. Great to see you, David. As always, does the macro data of late match Stephanie's micro summation of the kind of state of play at the moment as well? Strong US, weak international.
It definitely does. I think the strong U.S. data is actually pretty amazing. You had the Empire, the Philly Fed, a lot of other pieces of data, productivity data, all pretty good, and the bond market's just shrugging it off. So I think there really is this international push, the Bund breaking to over negative 70 or under negative 70, I should say. And I think there's another thing going on in the bond market. We've seen bond market volatility as measured in the MOVE index, which is like the VIX for bonds, touch levels that we haven't seen since 2016. And I think we're seeing a lot of stops. People had curve steepeners on, they're getting out of those. It's really, there's a lot of positioning in the bond market that may not be as informationally valuable as we're trying to read into it. So I think I want to watch how this bond market progresses over the next couple weeks to see if the bond market isn't just kind of having one of those cathartic sessions where we have to get a bunch of people out of bad trades. And then we can actually get the bond market to give us better signals for what's going to happen in stocks.
That is a key point that David is making right there. I mean, especially when we talk about the yield curve inversion and the fact that that historically has been seen as a, you know, recessionary signal. We were talking about it a lot yesterday. You had the Dow down 800 points, probably spooked quite a number of people who maybe don't even regularly check their portfolios but see a headline number like that. What do you think the bond market is telling us? And are we talking too much about the rising risk of recession right now to the point where we could actually talk ourselves into a recession?
Well, you could talk yourself into recession if you get business confidence and consumer confidence to start to deteriorate. So far, so good, though, on that front. Both remain elevated. Look, I mean, I think that the bond market, it's obviously very complex because we do have slowing growth here as well as abroad, right? I mean, that has been known, right? And so that's one of the reasons why the long end has actually been coming down, right? But, I mean, at the same time, I mean, lower rates around the world, it's like central bankers are like fighting to get to the lowest rate. And so naturally, it's kind of like, where are they going to go? This is the best rate here. And so I think that's really what it is, much more fund flow driven versus fundamental driven, even though we are slowing. But we're not going into a recession.
David, should the Fed cut by 50 basis points purely and simply to re-steepen the curve?
I think, well, Wilf, you know, I always answer those questions on, you know, what the Fed should do by saying nobody really cares what I think the Fed should do. It's what they're going to do. That's what our clients like to hear from people like me, is what I think they're going to do. I think you can make a case for 50. I think it's a reasonable case. I think the inversion really matters, and I think, you know, Jim Bullard's been one of those guys that's pushed that pretty hard. But again, I'll go back to my first set of statements. I think, you know, this bond market wasn't meant to be here. This is a heck of a rally. It's gotten a lot of people forced in. One thing I didn't mention in the last little blurb was also you have this thing called mortgage convexity hedging, which sounds awfully complicated. But when we start to see big refinancings in mortgages, people have to buy more duration. And all of this information, we're trying to glean information from the bond market for the stock market to say, recession's coming, the curve's inverting, there's a big move, it's telling us something really negative, and the Fed needs to react to that. Let's watch the positions. It's August. It's, liquidity's not great. This is actually, as I've been recommending to our clients who kind of participated in the strength of the stock market and the bond market for the start of the year, this is not a bad time to be on the sidelines and watching it. And I think we'll get some better information from the bond market in the coming weeks as people come back. I'm not at all convinced that we have big recession risks on the horizon. I'm also not at all convinced that this curve is telling you that recession is even on a 12 to 18-month horizon forward. And I am quite concerned that we've just seen a lot of stop-outs get us here. So I think it's a decent time to be more sidelined, especially if you had, think about where we came from. In the beginning of July, stocks were up 20% for the year, and a typical bond portfolio with duration was up over 10% for the year. Those are great numbers in 6 months. You don't have to chase this 10-year note below 2% and equities above 3,000. You can afford to watch it a little bit, and I think that's what I've been telling our clients, and I'm sort of happy I did it, and I'm not seeing any reason to jump right back into either until I get a better feel for what this bond market is telling me.
David Zervos, as always, great to see you. Thanks for joining us.
Thanks, Will.
We've got just under 50 minutes, 48 minutes left to go before the close. Yesterday, of course, we sold off into the close and ended at the session lows, down 800 points. Today's been volatile, some green, some red, but we are close to the session highs at the moment, up 104 points. The session high on the Dow was up 133.
We're going to see if this lasts. Plus, GE plunging on a new report attacking the company's accounting. We spoke with the author of that report on CNBC this morning.
Those losses are unsustainable, and they're growing at an exponential rate. For 2018, they grew at 60% rate. It's growing exponentially, and it's going to make this company probably file for bankruptcy.
Well, GE is hitting back. CEO Larry Culp calling it market manipulation. The report, that is, GE board member and chair of the audit committee, Leslie Seidman, will join us live for an exclusive interview in just a few minutes.
And as we head to break, here's a checkout of our data tracker. A number of positive economic reports came this morning. Retail sales strong, as we've already talked about. Also beating was productivity and unit labor costs, as well as the New York Fed's manufacturing index, the Philly Fed, and home builder sentiment. On the weaker side was initial jobless claims, which rose more than expected, and industrial production and business inventories also both missed. We're back in a couple minutes.
Value investing can be hard. Now it's easy with direct.
The RealReal has created the premier marketplace for luxury consignments. You know, the luxury consignment and consumer experience isn't just buying designer items, but also recirculating them. As Julie has stated, the future of fashion is circular.
The team at The RealReal is second to none. Every employee is an innovator. That is The RealReal.
Summer's not stopping or slowing down. So take advantage of all of summer's opportunities with our limited time offers while you still can. Hurry into the Acura Summer Performance event going on now. Owners of select competitive vehicles can get $1,000 toward a new Acura RDX or NDX.
Halftime Report. Weekdays noon Eastern on CNBC. BlackRock's fixed income CIO, making sense of recession fears. Where can investors find safety from the market turmoil? Tomorrow on Squawk Box.
Hi, I'm Hanno. I created Gabi because most people overpay on car insurance. Gabi is a free tool that saves you money by finding the best deal. Gabi users save more than $800 per year on average. Go to gabi.com and stop overpaying for car insurance.
These folks, they don't have time to go to the post office. They have businesses to grow, customers to care for, lives to get home to. They use Stamps.com. Print discounted postage for any letter, any package, anytime, right from your computer. All the amazing services of the post office, only cheaper. Get our special TV offer, a 4-week trial plus postage and a digital scale. Go to Stamps.com/try and never go to the post office again.
At Credible.com, we've helped thousands of people find great rates on their student loans. In 3 minutes, get actual pre-qualified rates from multiple lenders. Find low rates without hidden fees.
Visit Credible.com to see how much you could save.
Welcome back to the closing bell. The healthcare sector has pulled back for several weeks after rallying in June. Let's get to Katie Stockton, founder and managing partner at Fairled Strategies, for more. She joins us at the Telestrator. Katie.
Of course. So we're looking here at the S&P 500 healthcare sector ETF, and you can see the pullback right here into some potential support in that sort of $87, $88 area. I do think it will discover support there. What's interesting about healthcare, of course, is that it's really captured a phase of outperformance with the pullback in the S&P 500. So to me, that shows its defensive qualities, but it really does improve the relative strength outlook to some extent, which of course was very bearish for healthcare versus the broader market from about December all the way through April. So it does suggest that we'll get away from that kind of environment.
And was that bottom there in the relative performance right at the market top for the S&P 500?
That's right. So just really over the last couple of weeks that we've seen that relative relief rally.
And you've been diving into an individual name as well that stands out in terms of the technical.
Right. So I have McKesson. I'm not sure if I need to pull it up here or not. There we are. So intermediate term momentum is positive for McKesson still, and that's actually quite rare in the marketplace after this pullback that we've seen. So it stands out to me for that reason. We've seen in McKesson a nice breakout above this base resistance level, so that's promising a reversal of the downtrend line. You can see that here based on the shaded area on the chart, and that's also compelling to me. So as a turnaround play within the healthcare sector, I do like McKesson.
Steph, where do you stand on healthcare broadly and McKesson specifically?
I like healthcare a lot. I've been adding to United Healthcare. It's one of my biggest positions. And then most recently, a brand new position is Amgen. After the Enbrel announcement, I like their pipeline. The valuation is still very cheap. And biotech has kind of been wishy-washy this year, right? And McKesson, I just have more concerns on the political front and the headlines that we get. So that's why I'm not involved in that one. But plenty out there in healthcare to like.
Katie Stockton, thanks for joining us.
Thanks.
We've got 42 minutes left of trade. Let's check in on the markets as we go to break. We are up 84 points on the Dow. A nice 150-point swing in the last hour or so. We did trade lower as yields once again slipped about an hour and a quarter ago, but a little bit of positive momentum as we approach the close, up about 0.3% on the Dow. Coming up, a bearish call on one stock citing weakness in the global economy. The first place a recession might strike next.
And GE sinking today after fraud accusations. Independent board member Leslie Seidman will come on to live here exclusively to respond as the company hits back and denies those allegations. We've got more closing bell after this break.
This CNBC program is sponsored by SunTrust Bank. Confidence starts here.
Whether she's dreaming of college nearby or university abroad, whether you're planning a relaxing retirement or an adventurous one, at Franklin Templeton, we help you invest for a brighter future by actively navigating the markets so you can turn ambition into achievement. Reach for better. Franklin Templeton.
Franklin Templeton presents Elevate Your Game.
Welcome to South Carolina's beautiful Kiowa Island Club. I'm Carol Preisinger, LPGA National Teacher of the Year. Every golfer knows that a shot that lands on a tough lie is going to pose a challenge, but I can help you conquer those intimidating side hill lies. If you're a righty, a side hill lie going up will cause your shot to drift left. A side hill lie going down will cause your shot to fade. So just as you would aim a breaking putt on the high side of the green slope, you'll need to aim high above your target toward the high side of the slope. Now go through your pre-shot routine and determine how high you're going to aim. Aiming high on side hill lies will result in shots that stay on line. Aim high, and your score will be a whole lot lower.
Presented by Franklin Templeton.
This is a legal alert. A popular weed killer has been designated as a probable human carcinogen by the World Health Organization. Landscapers, those who work in the landscaping industry, farmers, and heavy exposure residential users where this popular weed killer is used are at risk for developing non-Hodgkin's lymphoma. If you or someone you love has been diagnosed with non-Hodgkin's lymphoma and has been exposed to a popular weed killer, call for more information and a free case review. Call now.
We're witnessing a dramatic shift in consumer psychology. It was part of the American dream to own stuff. Increasingly, if you can acquire or use something on demand, that's better than ownership. We're also going to see supply chains ripped apart by the cloud and by data. The on-demand economy is real time and responds to what consumers want rather than what retailers want to give them. This is the future of business. I watch CNBC.
Welcome back to the Closing Bell. Time for Word on the Street. Stevens has initiated on Caterpillar as underweight with a $100 price target. The firm citing slow economic growth and negative risk-reward for the company. Argus Research upgrading Pinterest to buy with a $40 price target. The firm says that Pinterest is well positioned as a host of content for the global ad industry. And JP Morgan upgrading Liberty Formula One to overweight with a $50 price target. The firm citing tailwinds, including inflation in sports media rights, a longer race calendar, and better monetization opportunities. Let's start with that one, Stephanie, the fun one. It's already up 30%, 26% upside from here. I mean, sports rights very, very valuable in this moment, but Formula One's not that popular here in the US.
No, I know. It really isn't. But that's what makes it kind of an interesting story, right? It's kind of off the radar screen. In fact, I had to take a double take this morning when I saw the upgrade. But I think the cost story is also important because you mentioned sports rights, but it's on the cost front. They've been spending so much money over the last several years, and now it seems to be plateauing, and that's where you're going to get the operating leverage. And in addition, they're going to pay down their debt. Still very, the balance sheet's still not that great, but that's what their plan is to reduce that leverage too.
Yeah, changing ownership a couple of years ago. She's saying it's settling down now after that on the cost side. Also, let's touch on CAT. So the Stevens note, $100 price target, initiating with an underweight. You still hold CAT?
I do. I mean, it's trading at 9 times earnings. It's down 9% on the year. The company actually in the most recent quarter, I mean, their guidance on revenue was at the low end, but they didn't lower numbers in the face of a global slowdown. So if they can do that in a global slowdown, if you get any kind of a pickup at some point, I think the stock is ready to go.
What sort of price gets you to top up your position?
I think like 110. I mean, I was buying this years ago when it yielded 5%, and it was like it's $70. So it's a little harder for me to buy up, but I still like the story a lot.
So sitting on some nice gains there, Steph. As always, congrats. So we've got just over 30 minutes, 37 minutes left to go of trade. The Dow at the moment up 79 points. We have got some red on the screen, as you can see, for the NASDAQ and the Russell. S&P and Dow up about 0.2, 0.3%. Still to come, we've got your last chance trade before the close, and GE shares plunging after that short report alleging fraud at the company this morning. GE swinging back. An independent board member and the chair of the audit committee will join us next, live, exclusive, to dispute the claims made this morning. You don't want to miss that. The stock has been all over the place today, remains sharply lower. Can it turn around off the back of that interview? You'll find out next here on the Closing Bell.
Yes, it's the first word of any new discovery. But when allergies attack, the excitement fades. Allegra helps you say yes with the fastest non-drowsy allergy relief and turn any half-hearted yes into an all-in yes. Allegra, live your life, not your allergies.
Everyone in your family is different. That's why Verizon now offers more plans to mix and match, so everyone gets what they need without paying for things they don't. New plans start at just $35. The network more people rely on gives you more.
Central banks worldwide are indeed engaged in a race to the bottom. You hear that a lot, right? They're doing everything they can to debase their currencies, lower interest rates, in order to breathe new life into their economies. Makes sense. Unfortunately, that means they're devaluing versus our greenback.
Hey, America. Do you feel like you're constantly squirming to get comfortable in your outdated underwear?
If so, you know these awkward adjustment moments all too well.
The wedgie shift, the party pick, and the hide and seek.
Those problems when you upgrade to Tommy John.
Our underwear is made with a luxuriously soft, lightweight, breathable fabric that stretches in 16 different directions. It stays put so there's no bunching, no riding up, and no more wedgies. Guaranteed.
Our stay-put waistband won't roll down or leave marks, and Tommy John underwear is designed for maximum breathability, which means you'll be cool and dry all day long. Overcome the uncomfortable
with Tommy John.
Visit TommyJohn.com now and use the promo code on your screen to get 20% off. Free shipping on orders over $75. And our best pair you'll ever wear or it's free guarantee. Experience the world's most comfortable underwear. Visit TommyJohn.com today. Tommy John, no adjustment needed.
Welcome back. We have 33 minutes left to go of trade. Here are the things driving action. Conflicting tariff news as China and the US attempt to set the terms for trade deal progress. Retail sales coming in stronger than expected this morning. Meanwhile, opposite signals from the bond market, with yields dropping once again, sparking concerns about the economy. We're up 83 points on the Dow with 33 minutes left. But it's time for a CNBC News Update with Sue Herrera. Hi, Sue.
Hello, Wilf. Hello, everyone. Here's what's happening at this hour. Former Colorado Governor John Hickenlooper is ending his bid for the Democratic presidential nomination. He released a video on social media announcing his decision.
I'm also proud of the campaign. I want to thank each of you, the leaders across this country who supported this campaign, those of you who invested financially, and the thousands more of you who made investments of your time and energy and ideas. Thank you all so much.
Peyton Manning helping to open the new Children's Hospital emergency room that bears his name in Evansville, Indiana. The former NFL quarterback for the Indianapolis Colts and the Denver Broncos was front and center along with hospital staff and children to cut the ribbon. Releasing limited edition run of pumpkin spice Spam on September 23rd, but it's only going to be available online at Walmart.com and Spam.com. No word yet on what it might cost. I am not sure about that one. Morgan, I'll send it back to you.
Sue Herrera, thank you. Well, General Electric sinking after fraud investigator Harry Markopoulos issued a 169-page scathing report about the company, alleging it is covering up accounting fraud. He says he spent the past 7 months analyzing GE and claims to have uncovered $38 billion in fraud, which he says is bigger than Enron. Take a listen to what he had to say on Squawk on the Street this morning.
The numbers are missing. They report top-line revenues, bottom-line profits, and nothing in between, like expenses, research and development, selling, general administration costs, research and development. It's all missing, including cash flows. They don't provide working capital. It's the only company in that industry that doesn't provide working capital. In fact, GE's working capital is minus $20.3 billion. Their current ratio is 0.67. If you word search current ratio in their annual report, it doesn't appear. Name a company that does that. That's accounting 101. WorldCom and GE and Enron lasted about 4 months once their accounting frauds were exposed. We'll see how GE does.
So in a statement, GE CEO Larry Culp calling the report, quote, market manipulation, saying Mr. Markopoulos' report contains false statements of fact, and these claims could have been corrected if he had checked them with GE before publishing the report. Joining me now in a CNBC exclusive interview, Leslie Seidman, who is an independent director on GE's board and the GE Audit Committee chair. Leslie, thanks for joining us today to respond to this.
Thanks for having me here.
So as the audit chair, I mean, we just covered a little bit of Mr. Culp's response, but how do you respond to these allegations?
Morgan, when I saw the report this morning and had a chance to just flip through it, my initial reaction was that I thought it was full of misleading, inaccurate, and inflammatory statements. That report does not reflect the GE that I know. I've been on the board for about 18 months now, and I've been the chair of the audit committee since April. And my experience being a director at GE is that I'm working with a great team of people and a great set of director colleagues. And our number one objective is to ensure that the market views our financial reporting as full of integrity and that we're providing complete and accurate financial information. So I think that the basis on which the report was developed is questionable at best. I don't recognize some of the accounting practices that he describes as GAAP, and given my background at the Financial Accounting Standards Board, I think I'm in a unique position to know when I see somebody who understands accounting and somebody who doesn't.
Yeah, I mean, you're the former chairman of the Financial Accounting Standards Board, a role you had before you did come to GE. The allegation of fraud, I mean, certainly accounting and accounting practices and standards historically at GE have been raised. Regulators are continuing to look at that in some of the different businesses right now. But fraud specifically, why not fraud? Why is that the wrong label to be putting on this, according to that report?
Fraud is such a strong and inflammatory word, meaning, intent to willfully deceive. Again, that is not the GE that I know. We are in full compliance with accounting standards in the U.S. We prepare them with a rigorous process. I, as the chairman of the audit committee, have full access to the people and the books and records at GE, and I stand behind the financial reporting of this company. Our role as directors is to oversee the process, and since I've joined the board, and again, speaking for my colleagues, we take this really seriously, and there is no basis for an allegation of fraud here.
Long-term care insurance, I mean, it's just been historically, not only at GE, but across the industry, it has been a really tough business for companies to get their arms around in terms of assessing the risks, taking the reserves, accounting for future liabilities. Does GE have its arms around business?
Yes. We have taken steps in the last year or so to bring in new talent to manage the operation. We have gone through a robust process with respect to the loss recognition test and the processes we go through to estimate the liability. And as part of our normal course of operations, we're going to be performing a current loss recognition test in the third quarter, which is a normal part of GAAP accounting. So I think we do have our arms around the accounting, and I think that the amount at which we state the reserves currently is fair and in accordance with GAAP.
So when this report comes out and says $29 billion in new LTC reserves that GE needs, $18.5 billion that would require cash immediately, you think what?
I think, what is the basis for that statement? I think the report is full of opinions, and this is one of those cases where I'm not sure that the author of the report really understands the accounting in this area. We have generally accepted accounting principles, and then we have statutory accounting principles, and then we have other people who just, inject their own opinions in this process. He seems to be conflating all of those different bases of accounting. Now, we can question, is it because of incompetence? He doesn't understand the accounting standards here? Or is there some other motivation? It's not acceptable under GAAP to just say, let's make the liability bigger. Or, let's take the statutory basis and book it for GAAP. That's not how this works. We're following accounting standards, and we are complying with them using robust processes and doing our very best to be transparent about it. This is one of those areas where the company did a teach-in to try and demystify the accounting in this area. And I'll tell you that it was very well received by analysts and others as a best class practice for trying to help people understand.
Yeah, and certainly the fact that additional charges weren't announced at that teach-in or even the end of last year with new management, Larry Culp and his team coming into place, certainly seen as a positive by investors and analysts, and arguably one of the reasons we've seen the stock rally as much as we have this year. That being said, I mean, this is a report that's out today. This is from Melius Research, Scott Davis, who I believe is still an investor in the name, also an analyst. Buy rated, target price $16, but he says here that the short accurately depicts a GE culture that historically hid losses and deceived investors. We lived it. This part is real, and that GE has no credibility at all in responding to the report today is inaccurate.
I'm here to try and set the record straight with regard to that. I stand behind the accounting that we have for the insurance liability and every other element of our financial statements. We are going through this process to try to make sure that people understand the elements of insurance accounting. It is full of assumptions and other inputs, and it's not easy to understand. But what we're trying to do is show that we have true liability when we had to unlock the assumptions, and we will be going through a periodic process to do that in accordance with GAAP. In the third quarter this year, we go through our annual loss recognition test, and we'll do it again. And let me just say that, interest rates have declined. We have other changes in the assumptions and our experience that will be factored in, and so we'll probably see a change in that liability. But that's in accordance with GAAP. That's the way this process is supposed to work.
Now, I know Mr. Markopoulos came out today on CNBC and basically said that GE and GE's leadership, even current leadership, should be held accountable, and that there continues to be fraud and basically a cooking of the books. I realize that you are saying that is not correct. This is factually inaccurate. But if you look at the history of GE, everything you've seen happen with the company under predecessors, is there a case here? Could there have been, especially when you see that the long-term care insurance reserves were disclosed and they were so big and so much later than everyone else in the industry, is there a case here that predecessors have brought us to this point and there could be fraud there?
So I'm not here to talk about predecessors. As we have disclosed more time than once, there is an ongoing investigation of those historical matters. I'm here to talk about the accounting today. And I think it is baseless and inflammatory to accuse this management team of fraud. That is just so beyond the pale. The people I work with, the management team, the other directors, et cetera, are so committed to trying to enhance the credibility of our financial reporting and be proactive about what do investors want to know and provide that information. The insurance teach-in is a great example of that. So I think it's baseless, and we really do need to question the motives of the people behind this report.
In terms of the financials that the company discloses, one of the comments that was also made by Markopoulos today, come out with a totally clean set of books, he argued, that add more details, expenses, R&D, SG&A, and went down the list. Is that something that GE can and should and would do? I think there's certainly a lot of investors who are long-term investors who would like to know even more about the company's financials, if for no other reason than to know that there are no more skeletons in the closet.
Yeah, so that comment relates to the company's segment reporting, in other words, giving that level of detail business by business.
Yeah.
And here's a great example of a case where he is making unsubstantiated inflammatory comments. We are not required to provide that level of detail on a segment-by-segment basis. If we have a groundswell of investors who were to say to us, we'd really like you to provide it that way, that's something this management team would take seriously. So it's have received that input and are providing that level of detail, but the actual accounting standard in this area does not require that level of detail. So it is inexcusable to use the word fraud in this context.
He also said that he's shared his data and his report with regulators. Said he's not making a comment, but that it's been favorable. Have you heard from regulators who are investigating GE for accounting on this report yet?
I have not.
Okay. I just have one more question for you in all of this, and that is, given the fact that this is a name, this is a stock that has historically had quite a number of retail investors in it, including both former and current GE employees. When someone does come out and talk about the possibility of bankruptcy and raises more questions about cash, which clearly has been an issue over the last couple of years, what is your response to them? What do they need to know about the state of GE right now?
So I think that GE has plenty of liquidity. Larry has articulated many times that we have cash, we have access to credit lines, we have a plan to monetize other assets, and so I don't have any concerns about the liquidity of the company right now. But you mentioned those investors, and I think what I would say is I think we've got to get to the bottom of this. I think that this report today set a very dangerous precedent where somebody can just say things and then potentially benefit monetarily significantly from the decline in the stock of the company. That is wrong. And I really think that we need to investigate the motives for this. And because here we have Mr. Markopoulos and whatever this unnamed hedge fund is probably benefiting significantly financially today, and yet holders of GE stock have suffered a loss. And I just think it's wrong, and we need to look into this sort of unsubstantiated reporting without him ever contacting the company for comment or for an opportunity to respond to any of the allegations. It's just wrong, and I think we need to look into it.
Leslie Seidman, thanks for joining us today.
Thanks for having me.
Wilf, I'll send it back over to you.
Morgan, thank you very much for that. Thanks also to Leslie Seidman. What stands out, of course, is an unequivocal denial there from the chair of the the audit committee from GE that the accusations made this morning by Harry Markopoulos were wrong, that they were unsubstantiated. And of course, she has great credibility in this area, having been the former chairman of the Financial Accounting Standards Board. Though I would say that defense was based on when she joined the board in 2018, and about current management wouldn't go as far as to say the same level of defense for her predecessors. The share price remains down sharply on the day, 10.5%, off the lows, which was down about 13 or 14% intraday, but still down about 10.4%. Stephanie Link, of course, is still with me. Steph is a shareholder. What's your takeaway?
Well, it's disappointing for sure, but the report this morning was actually all the data inside that report was in the K. So we've already known all of this. And we also know that they are going to have to increase their reserves, something to the tune of $9 billion with an accounting change, or charge rather, probably up to $14, $15 billion. They can still pay down debt. Liquidity, as she mentioned, is fine. They have $46 million credit line. And they have $21 billion coming from the biopharma sale. So this is, I think, a big overreaction. It's hard to step in, right? But I think she has a lot of credibility, and I believe the company.
Did you buy more then with this 10% pullback?
I want to wait for the dust to settle, but I believe in Larry Culp, and I think he's going to get the job done. And in fact, last quarter when they reported, it actually was a better than expected quarter on many fronts. There were puts and takes, but power stabilized, cash flow was actually improved, orders grew 4% on the industrial side. So I think there's some things that he's doing that are fixing the company. Unfortunately, this has to come out. Oh, by the way, he's buying stock, right? So, I mean, I feel like this is a big over-exaggeration. Let the dust settle, and then I'll be in buying more.
Okay, Stephanie Link, thank you for that. We've got 17 minutes left of trade. We're up 94 points on the Dow. Next, Katie Stockton is back at the Telestrated to tell us what she sees in the charts if the U.S. is the best place to be buying equities. Plus, we'll get earnings results from NVIDIA and Applied Materials after the bell. AMAT up more than 40% year to date.
Interactive Brokers charges 3.63% for a $100,000 margin loan. Do you know how much your broker charges? Up from 8.07% at Fidelity or Schwab to as high as 8.75 to 9.25% at Ameritrade or E-Trade. Move your account to Interactive Brokers and save at least $4,400, or much more if you're trading big bucks.
Driverless cars, or trips to Mars, $4.95. Delivery drones, or the latest phones, $4.95. No matter what you trade, at Fidelity it's just $4.95 per online U.S. equity trade.
If you've tried college but never finished, SNHU lets you transfer up to 90 credits toward your bachelor's degree.
It doesn't matter how old you are, you can do it. You can finish.
Finish your degree at snhu.edu.
Hey, Ted, how you guys doing?
Oh, good. How are you doing?
We're okay. You know, our garage door is giving us some trouble. You guys know a good repairman?
Actually, we do.
Perfect. Tell you what, get us multiple quotes, check all the reviews, and then book the best one for Tuesday. Let me know what you have for me by the time I get to the office. I gotta get to work. And so do you, right?
You can't expect your neighbors to do everything HomeAdvisor can. So for a better way to get home projects done right, just ask HomeAdvisor.
This is a legal alert. A popular weed killer has been designated as a probable human carcinogen by the World Health Organization. Landscapers, those who work in the landscaping industry, farmers, and heavy exposure residential users where this popular weed killer is used are at risk for developing non-Hodgkin's lymphoma. If you or someone you love has been diagnosed with non-Hodgkin's lymphoma and has been exposed to a popular weed killer, call for more information and a free case review. Call now.
All right, we're in this together, Peloton. 3, 2, rise with me. Make every step a little stronger than the last.
Over 90 live classes every week. Just one part of the best cardio machine on the planet, Peloton.
I've been on a diet for as long as I can remember.
I even cut out bread and pasta for a day. And then I tried Noom. It's an easy to stick to program that actually changed my habits. It just clicked. Visit Noom.com and lose the weight for good.
Hashtag Fire Festival is a fraud. Philly would take money from anybody who was looking for the next big thing.
New truths behind the lies. All you American Greed, the Fire Festival. Monday, 10 Eastern, CNBC. Get yours.
Well, with 14 minutes before the bell, here is where we stand on Wall Street right now. The Dow's up 118 points in what's been another volatile session. S&P is also up about 0.3%. NASDAQ trading right around the flat line. Small caps and transports are the underperformers in today's trading activity. Up next, we've got your last chance trade, so stay tuned.
Flight number 417 is behind.
You should be mad at airports.
Where's gate 87?
You should be mad at non-seasoned travelers.
And they took my toothpaste away.
And you should be mad at people who take unnecessary risks.
He's my emotional support snake.
But you're not mad because you have E-Trade, whose tech helps you understand the risk and reward potential on an options trade.
It's opaque, it's not liquid or a gel.
And even explore what-if scenarios. Don't get mad. Get E-Trade and start trading today.
When your hands hurt, you can't function. Until now. Introducing the new Copperfit compression gloves with Sure Grip technology to give you more power, more control, and more agility than ever. Copper-infused compression fabric woven into an ultra-lightweight performance glove that supports relief and recovery of sore muscles and painful joint stiffness. And new Sure Grip bands built in provide a strong, non-slip grip.
They relieve my pain. The support or whatever magic these things do, I don't know what it is. It doesn't matter to me what it is. It works.
Relief from painful muscle and joint soreness. Guaranteed. At CopperfitGloves.com for only $19.99. Order right now and your shipping is free.
While I'm wearing this, I do not have any pain. I can use it on the keyboard. I can use my phone. I love this glove.
Ask for it by name. Copperfit Compression Gloves. CNBC's Upstart 100, an exclusive list of fast-growing startups to watch. Go to cnbc.com/upstart by August 23rd to nominate your company to this elite group. Deadline extended. Nominate now.
This is Kate.
Hey.
She takes 2 prescriptions. Kate's son Jack takes 1 too. Kate works hard and thought she had good insurance. But she still pays too much. That's no good. So Kate downloaded the GoodRx app. Now she can compare prescription prices to find the best discounts. She even beats her insurance price. Good for you, Kate. Good for you. GoodRx. Stop paying too much for your prescriptions. Download the free app today.
College is exciting. Finding a way to pay for it shouldn't get you down. At Credible.com, we've helped tens of thousands of people find great rates on their student loans from lenders you can trust. In 3 minutes, get actual pre-qualified rates from multiple lenders. Checking rates doesn't impact your credit score, and we never sell your data. Don't get ripped off on your student loans. Let's focus on your future, not your debt.
Visit Credible.com and in 3 minutes, see how much you could save.
Welcome back to the closing bell. 11 minutes left. We are at session highs. You can see that nice little leg up to the right-hand side of that chart. We're up just over 0.5%, 140 points on the Dow. The S&P's up close to 0.5%. NASDAQ now in the green, up 0.1. Russell still lags. It's just negative. Let's send it back to Katie Stockton, founder and managing partner of Fair Lead Strategies, who's taking a look at global markets relative to developed markets, emerging versus developed. At the telestrator, what's the charts telling us?
Well, it's actually a happy message for the U.S., believe it or not. We have long-term downtrends in both developed global and also emerging market ETFs versus the SPY or spiders. And you can see pretty fresh breakdowns in both measures, which would support continued long-term underperformance by international markets, equity markets, of course, relative to the U.S. stock market. So to me, that's a continuation pattern. I do think oversold conditions will give us some kind of bounce in favor of emerging markets and developed global. And to that end, I think we should probably talk about China as being really the culprit, as the most overdone on the downside here. So this is a chart of the Hang Seng Index, and you can see that it does actually have some support in this orange area here based on previous lows on the chart. Of course, it has a lower high in place, so that does reflect weak momentum there. But from the breakdown that we saw earlier this month, we've already seen what's called a measured move. So it's really reached its target already. So certainly due for an oversold bounce.
That's the Hong Kong index as opposed to
That's the Hong Kong index, right. So you'd be more concerned if it took...
factors weighing on it, of course.
Of course, and that's why it's good to have levels to watch as a gauge of risk.
So just looking at these charts right now, then, I mean, we've had a number of people come on and said that EM looks attractive right now. Your response to that based on everything we're looking at here?
I would say short term, there's certainly some opportunity. Longer term, we have to see it. It needs to prove itself in terms of momentum.
All right. Katie, thank you. We've got less than 10 minutes to go. Stephanie, what's your last chance to trade?
Cisco. So the stock is down 11% in 2 days, and it's down 20% from its highs. And trades at 14 times earnings, which have been revised. I think they're very conservative on guidance, and it yields almost 3%. And the story has not changed. Mid-single-digit orders ex the service provider business, right? Gross margins are expanding. Operating margins she actually raised yesterday, and they have a new product cycle in switches, the whole family, Catalyst 9000. So I actually like this story. I think it's way overdone on the downside, and I'd added to it today.
Even if global growth surprises on the downside and the trade war surprises to the downside, you still like it?
Yeah, I mean, I think that they de-risked the numbers. I think that guidance was really what was surprising, right? But half of the guide down was China. That's 3% of their total revenues. It was down 25%. I think from here, we've already now de-risked that. So it's not without, you get a little bit nervous with global growth exposure, but I think you have to take advantage of some of these high blue chip quality companies with this fabulous management team to take advantage of it.
There we go. That's your last chance trade from Stephanie Link today. Cisco's down 8.5%. Great opportunity to buy, in her opinion. We've got 7 minutes left of trade, and we're high near the session highs up 140 on the Dow. We'll be covering all of the angles in our closing countdown when we come back. Don't go anywhere.
Fun fact, 1 in 4 of us millennials have debt we might die with. And most of that debt is actually from credit cards. It's just not right. But with SoFi, you can get your credit cards right by consolidating your credit card debt into one monthly payment. You can get your interest rate right by locking in a fixed low rate today. And you can get your money right with SoFi. Check your rate in 2 minutes or less. Get a no-fee personal loan up to $100K.
Did you know that 4 out of 5 homeowners draw a blank when asked what their home projects should cost? That's why Home Advisor created a national database of home project costs, so you can easily see what others paid for similar projects in your area. Then you can get matched with top-rated pros and read their reviews, all for free. Start your next home project knowing what you should pay. Go to homeadvisor.com or download the free app.
Home Advisor. Attention Medicare beneficiaries. The Center for Medicare Services has officially authorized new benefits Medicare Advantage plans may include. Plans may now include private home aids and rides to medical appointments. Most plans also include dental, vision, hearing, and prescription drug coverage. To get the benefits you deserve, call the Medicare Coverage Helpline now.
Hi, I'm Joe Namath. I called the Medicare Coverage Helpline, and they instantly advised me that I wasn't getting all the benefits I deserved. They explained I could get a plan that includes dental and prescription coverage, as well as the new coverage for private home aids and rides to medical appointments. If you want to find out what you deserve, call the number on your screen now. It's free. You'll be happy you called, I guarantee it.
Call to see if you can save money and get more benefits now. Don't delay. Call now. It's free. Call 1-800-548-2837. That's 1-800-548-2837 now.
You should be mad at leaf blowers. You should be mad your neighbor always wants to hang out.
I got a new grill.
And you should be mad your smart fridge is unnecessarily complicated.
Make ice.
Make it ice. But you're not mad because you have E-Trade, which isn't complicated. Their tools make trading quicker and simpler so you can take on the markets with confidence. Don't get mad. Get E-Trade and start trading today.
The Closing Bell is sponsored by E-Trade, the original place to invest online.
Highs right now. The Dow's up 137 points. The S&P is at 2853 right now. It is time for the closing countdown. Let's trade at the close with Sean Cruz, TD Ameritrade Manager of Trade Strategy. Sean, what are you watching into this close here?
It's encouraging to see the market rally into the close today, but if I'm looking at the VIX to see if any rally is going to be sustainable, or two is going to be able to continue to follow through to the upside. And we're still seeing the VIX, the volatility index, which measures uncertainty or fear in the market. I think right now it's just showing a lot of uncertainty, and that's why you're seeing it remain elevated up here at about 21. So before I really think there's a lot of conviction behind any rally, I want to see it break at least below 20 and back down to 18 to show that investors are feeling a little bit more confident in coming back into the market.
Aside from the VIX, you've been focused on the macro data more than anything else, is that right?
Yeah, I think we got a lot out earlier this week. If you look at, in about a 24-hour period, we got bad news out of China that showed industrial production and retail sales lower. If you look over to Europe, we saw Germany show a little bit of a slowdown. EU GDP came in a little bit low, and their industrial production dropped 2.6% year over year. So you have to start to ask yourself, how long can the U.S. remain resilient against so much weakness globally? And I think that's something that's going to be in front of a lot of investors' minds, and it's probably in front of the Fed's mind as well as they determine policy for the rest of the year.
Yeah, and certainly that's been putting pressure on energy, right? I mean, if you look at the S&P, there's only one sector negative year to date. It's energy, but you see opportunities there too?
This is maybe an opportunity to go in there and pick up a little bit of yield. And if you're looking at what's going on with yields right now, they're a little bit more stable, have healthier cash flows and balance sheets. But if you look at something like Exxon, off
minus 71 basis points as hints of more stimulus at their next meeting. And finally, the dollar index very firm while all this goes on. And Bertha, NASDAQ desperately trying to stay in the green.
Yeah, looks like it's trying to firm here into the close. Cisco has been the big drag, still off 8.5%, on pace for its worst day in about 6 years. But you're also seeing a lot of other companies that are also suffering today on concerns about slowing. J.B. Hunt, 8 straight months of shipments for shipping freight down. 8 straight months. Also, American Airlines, concerns there about slowing as well, potentially when it comes to flights hitting a new low. 337 new lows today. A lot of them did turn around this morning, particularly small caps like Children's Place. And we did see a bit of a turnaround in the big caps today on NetApp yesterday. Biggest decliner, one of the biggest decliners, hit a new low. So we are seeing a little bit of a turnaround here into the close.
Extended the recent sell-off modestly. Energy, a lot of new lows again. Conoco, Schlumberger as well. There's the closing bell, ending just off the highs for the day. The Dow Jones Industrial Average closing up roughly 100 points. The S&P up 6 points.
the session. Joining us now to talk about the market day overall, Stephanie Link, head of global equities research at Nuveen, is still with us, along with Scott Wren, a senior global equity strategist at Wells Fargo Investment Institute, and Lisa Erickson, head of traditional investments group at U.S. Bank. Stephanie, I'll start with you. I mean, given it was another volatile session, we were, you know, in and out of the red today, but we finished near enough to the highs when you look at the close.
So I mentioned I was looking at Walmart and Cisco, but I'm also looking at interest rates. I mean, my goodness, look at the 10-year at 1.5. I mean, right? I mean, productivity, retail sales. I mean, some of the things that Walmart said also were very positive about the underlying consumer. So it is, you know, it's encouraging that we can rally, but I always say I would rather rally with cyclicals versus the defensives, and the defensives were certainly the leadership today.
And again, on the yield point, as Rick's been pointing out all day, the German 10-year closed at a low, so that had some effect. The data here was pretty good. Scott Wren, what was your take on the U.S. data here today?
Wilfred, I thought the retail sales number was obviously good, and you knew it was going to be a pretty wild day in the market when, you know, a couple hours before the open in a 45-minute period, the S&P futures traded in a 52-point range. You don't see that very often, but, you know, that's kind of the tail of the day. The data was pretty good. Industrial production disappointed a little bit, but certainly the consumer is what has made this economy move forward, and it looks like that's going to continue to be the case.
Lisa, how do you view this market right now? How would you be telling clients to have themselves positioned?
We're really advising our clients to stand pat on their positions. Basically, we feel like it's a balanced return risk picture. And really, if you look at it, the data today confirms that view. What we had really is a mix of data, certainly as your other guests were just pointing out. Really, retail sales continue to show that the consumer is staying in the game, but we've got some weakness on the industrial production side. And again, that shows really how there's a balance of return and risk going on. So really, we'd like for our clients to stay at their strategic long-term positions rather than taking an over or an underweight position at this time.
Stephanie, you mentioned the rates outlook, which is not positive. Haven't had you on for a couple of weeks, so I want to know where you stand now on the U.S. banks. We've got Warren Buffett increasing his stake in the banks and Bill Ackman investing in Warren Buffett. Where do you stand now on the U.S. banks?
Oh, you have to be patient, for sure. And, you know, you can't just own a sector or stocks just because they're cheap. You really do want a catalyst. And I would say that we don't have a lot of catalysts here in the near term, but I still like them. I still think their capital positions are very, very strong. They're in there buying their own stock probably every day. And the one theme that we talked about when these companies reported was how strong the consumer was. So here we go again, right? It's all about the consumer, which is a big part of the U.S. economy. And I think they can benefit from the consumer, from mortgages, as mortgage applications are actually up double digits, triple digits this week alone. I think there are some, and then fees. And I think there are some positive tailwinds for them versus just rates and just net interest margin.
On that point, Warren Buffett is loading up on the money centers.
Yeah.
Wells Fargo, Bank of America is adding U.S. Bank, or got J.P. Morgan as well. You've been long Morgan Stanley in the past. Are you still, and why Morgan Stanley versus them?
Yeah, I mean, I do own Morgan Stanley, but I also own Bank of America and Citigroup. And Bank of America is a much bigger position because I do think that there is another story there, and that's on the cost side of things. I think Brian Moynihan and team have done a great job in terms of controlling costs, cutting costs, but there's still more to go. And so I think you will be able to see operating leverage like you saw in this past quarter. Citigroup is more of a global play, and Morgan Stanley is really, if the volatility continues, that's not a bad thing for them as well, but a distant third for me.
On global plays, let's talk China trade headlines driving a very volatile day on Wall Street. Kayla Tashi breaks down all of the latest for us. Hey, Kayla.
Hey, Wolf, the standoff continues between the U.S. and China, with both sides digging in. In a series of missives, the Chinese government says it will retaliate in September if the U.S. puts on new tariffs, that Washington should not offer advice on Hong Kong, and that the U.S. must meet Beijing halfway to reach a deal. On the flip side, the President Trump, meanwhile, says a deal will be on U.S. terms. The President Xi should simply meet Hong Kong protesters to settle their concerns, and that the U.S. will soon be winning big on trade. Now, one of the weapons used by the White House on trade is labeling China a currency manipulator. The Washington Post this afternoon reports that President Trump exerted what it calls immense pressure on Treasury to do so, with mixed results. Wilf.
Kayla, thank you very much for that. I'll go to you, Lisa. What's your take on the latest on trade? Is it the key factor you watch as to whether or not we're going to have risk on or risk off sentiment in markets?
So we do think trade is a really key factor driving the markets right now. If you look again at the economic outlook, we've got pretty moderate global growth. So really anything that could bring down that growth rate even slightly is a concern. And the other big implication of trade is really just the uncertainty that it's bringing into the overall picture, which is then again bringing down that CapEx spending and causing businesses to delay their spending plans. So we do think it's a big factor. Right now, we don't see it tipping the economy into recession, but we want to continue to monitor it going forward.
Scott, do you think that investors need to settle in for a much longer U.S.-China trade scenario playing out? I mean, I know we're getting these headlines, and it's moving things back and forth on a daily, sometimes intraday basis right now, but not that much has changed other than the fact that we do have additional tariffs of 10% on more goods being imported from China coming in right now. I mean, longer term, this seems like it can continue to be painful.
Well, you know, Morgan, we are expecting an eventual deal, but, you know, it's probably not going to be this year. It'll probably be sometime in 2020, and it might not be that great a deal. I don't think the market really needs that great of a deal to respond positively to that. But certainly we're going to react to every headline. Once again, today was a perfect example of that. And some of the things that Karen mentioned, I mean, you know, currency manipulator, you know, retaliation, these various things. This trade friction has been ratcheted up a notch here in the last week or 10 days, and you know, that increases the risk to our outlook, which is really a modest growth, modest inflation, Fed being pretty easy, no recession over the course of the next 12 months, or at least a low probability. So these increased tensions really put negative risks to our outlook. So we're paying very close attention.
Stephanie, the Russell 2000, the small caps again, which tend to be historically more U.S. focused, again underperforming the market. They've been among the worst performing averages, at least here in the U.S. year to date. Is a rally due for this particular part of the market, or no?
I mean, it could, for sure. I mean, everything can bounce, right? But there's a big component in terms of financials in this index, too. So, okay. I mean, you have to see that financials are going to catch a bid, and not with rates at 1.5.
All right. Well, the Wall Street Journal editorial board put out another op-ed critical of Trump's trade policy called the Navarro Recession 2. The piece hits Trump's trade advisor, Peter Navarro, and argues that despite the administration's assertions, China trade policy is more to blame for the recent plunge in stocks than the Fed's interest rate policy.
Last week, we spoke to Peter Navarro here on Closing Bell. He responded to the criticisms he's received from the Wall Street Journal editorial board.
I wear it as a badge of honor to be attacked in the Wall Street Journal. The Wall Street Journal has never, ever supported our trade policy going back to when Donald J. Trump was a candidate, and we don't really expect them to change their stripes now.
Scott, where do you stand on this debate? Who's to blame, and are we headed for a recession?
Well, for us, we think there's a low probability in the next 12 months, although, you know, as I said, well, for these risks, based on the last couple of weeks, have increased the negative risks for that. But I don't know if there's really anybody to blame. I think the president's trying to take a tough stand here. We certainly are concerned about stealing of intellectual property, joint ventures, and a number of other things. So we want to make some progress there. I think everybody agrees on that. Not a lot of agreement on tactics. The Chinese look like they're ready to play some hardball too. But as I said, I think for us, we expect an eventual deal. We expect a lot of volatility between now and then. We expect a lot of days where the market's going to react to headlines, both positive and negative. And like today, you had positive and negative on the same day. So that's been a little bit unusual lately, but I think we should be ready for continued volatility. Still, though, on drawbacks, you know, the June low looks like a spot to maybe think about adding to equities. But for the most part right now, we don't really want to hang it out there too much. We want to lean a little bit towards cyclicals, but not very much.
Lisa, when you see a name like Cisco, a Dow component like Cisco, finish the day down more than 8.5%, that's a big move for that stock, and certainly comes on the heels of earnings and some of the weakness in its guidance tied to China. What is your outlook for earnings in Q3 and Q4, and do you think enough of the trade risk is factored in yet?
So we've been pleased with Q2 earnings. Certainly, they were able to beat the bar of expectationals that were already set. But to your point, looking forward, we are concerned. And what we see is that, first of all, earnings estimates are being ratcheted down, both for Q3 and Q4. And in addition to that, if you look even a little further out, actually the expectations start to look a little bit high. So again, starting with Q4 and then into Q1 of next year, we've even are up to slightly double digits on the earnings expectations for next year. So those do raise some areas of concern, and that is, again, leading to our more balanced outlook. Again, while we see the economy in decent shape right now, we need to see how that trajectory continues.
Well, speaking of earnings, we do have an alert on Applied Materials. John Fort has those results for us. Hey, John.
Hey, how's it going, Morgan? Well, Applied has reported, and it's a beat on the top and bottom lines, and also a positive guide. This is important because Applied Materials is a bellwether for semiconductors and also displays. They reported revenue of $3.56 billion versus $3.52 expected, non-GAAP EPS of 74 cents versus 70 expected. And then for the current quarter, fiscal Q4, they're expecting $3.68 billion in revenue, plus or minus 150 million. The Street was looking for 3.64, and they're also projecting 72 to 80 cents of non-GAAP EPS versus 75 cents expected. So the midpoint on that is 76, a little better than the Street was looking for. That's why you see the stock up nearly 3% after hours so far, guys.
John Fort, thanks for breaking down the numbers for us. Stephanie, what do you think? Bullish for semis overall?
Depends on their guidance about display and memory. We are waiting for them to say, and the industry to say, when are we at the bottoming point? When are we at the trough? I think we're getting close. Lam also was conservative, but there were some light at the end of the tunnel kind of comments from Lam, so we'll see what Applied has to say tonight.
Applied up a couple of percent in after hours, up 44% year to date as well. So
trades at 13 times, not too expensive.
Strong performer already year to date. We've got Nvidia coming as well, due to report any moment, so we'll bring you those numbers when we get them. Our thanks to Stephanie Link, Scott Wren, and Lisa Erickson. Great to see you all as always. Still ahead, Walmart shares have surged today after strong earnings guidance. Up next, we'll discuss whether Walmart's results could give relief to the retail industry as a whole, or whether it's stock specific.
And Nvidia's earnings are due out any minute. Coming up, find out how you should be trading the chipmaker stock after those results are released. Plus, much more reaction on GE having its worst day since 2008 in the wake of fraud accusations by the accounting expert who blew the whistle on Bernie Madoff's Ponzi scheme. Stay tuned.
The Bond Report is sponsored by PIMCO.
Sure, a resume is a great way to see someone's experience, but you're not hiring a resume, you're hiring a person. That's why Indeed offers tools that help bridge the gap between a candidate and their resume, like skill tests, which let you actually see a candidate's abilities in action to make sure they're a good fit for the job. It's no wonder Indeed delivers 3 times more hires than any other job site. See beyond the resume with Indeed. Get a free sponsored job upgrade on your first posting at Indeed.com/offer.
BlackRock's fixed income CIO, making sense of recession fears. Where can investors find safety from the market turmoil? Tomorrow on Squawk Box.
CNBC Evolve, transforming companies for the future. September 24th in Chicago. Strategies for embracing change and staying competitive in an age of disruption. Valuable lessons learned from top executives on the front lines. Register now at cnbcevents.com/evolve. Sponsored by Abbott.
JG Wentworth, how can I help you get cash?
I want to pay off my debt and move into my own place, but I need cash now to do it.
Do you get regular payments from an insurance company?
Yes, monthly, but the thing is, it's my money and I need it now.
Right. In exchange for some or all of your future payments, we give you a lump sum of cash now. Call now and you'll also get $25 for receiving a quote.
Call 866-429-6203 now.
Thanks, JG Wentworth.
I finally got to start my career. Except that I was spending thousands of dollars on interest on my student loans and I needed to refinance. And then I found Credible.com. Within just a few minutes, I had actual rates from lots of lenders. Now I'm saving thousands of dollars and I'll be out of debt much sooner. And I can focus on my future. It was so easy, I wish I had done it years ago.
Visit Credible.com to see how much you could save on your student loans.
About 115 years old.
We can rent this for $350 a night.
And we're looking at a profit of about $62,000 a year.
Cash Pad, all new, Tuesday, 10 Eastern. CNBC, get yours.
Welcome back to the closing bell. Another wild day for stocks, and the Nasdaq underperforming the major averages today as well. Bertha Coombs has the details there. Bertha.
Yeah, Morgan, it looked like we were going to end in positive territory, but at the end of the day, Cisco continued to be a drag on tech. Cisco hitting a 7-month low after its disappointing outlook and disappointing earnings, and talking about slowing partly because of China. But we also did see a number of the big caps today were strong. Facebook, in fact, helped the communication sector today avoid going below those August lows and challenging the June lows. So we did see a little bit of a turnaround there, and we saw most of these sectors just flat on the day. So that's pretty good news after that big drop we saw yesterday. Over to you.
Bertha, thank you as always for that. Now, retail earnings came in mixed overall. Walmart and Alibaba beat expectations, while Macy's and Tapestry fell short. And while retail sales rose 1% in July, the sector still faces headwinds from ongoing trade disputes between the U.S. and China. Let's bring in Bill Simon, former president and CEO of Walmart U.S., Dana Telsey, CEO of Telsey Advisory Group, and Liz Dunn, founder and CEO of Proforma. Very good afternoon to you all. Bill, I'll start with you. Is the U.S. consumer very strong?
U.S. consumer is doing really, really well. You know, all the indicators that you would look at typically are very strong. Employment is real strong. Unemployment's low. Gas prices, which are a huge indicator, particularly in the middle and bottom segments, are low and stable. Wages are up. So the consumer's ferocious in their appetite right now and continues to respond well.
Liz, on the one hand, we had those numbers from Macy's yesterday, the stock plunging. Today, we get stronger than expected numbers from Walmart, the stock jumping. What is the read-through here when you look at two different earnings reports? What is the read-through to the retail sector more broadly, especially as we get more numbers next week?
Yeah, I think the consumer is in good shape, but what we're seeing is really a consolidation from some of these large players like Walmart, Target, Costco. Walmart said it in their press release. They are taking share, and the department store sector has been tough for a while. That continues, and I think it's a contagion that's infected the entire mall.
I don't know if the president's watching, but he tweeted 40 seconds ago, says, quote, Walmart, a great indicator as to how the U.S. is doing, just released outstanding numbers. Our country, unlike others, is doing great. Don't let the fake news convince you.
Read through to the retail sector more broadly, especially as we get more numbers next week.
Yeah, I think the consumer is in good shape, but what we're seeing is really a consolidation from some of these large players like Walmart, Target, Costco. Walmart said it in their press release. They are taking share, and the department store sector has been tough for a while. That continues, and I think it's a contagion that's infected the entire mall.
I don't know if the president's watching, but he tweeted 40 seconds ago, says, quote, Walmart. A great indicator as to how the U.S. is doing just released outstanding numbers. Our country, unlike others, is doing great. Don't let the fake news convince you. A great indicator as to how the U.S. is doing just released outstanding numbers. Our country, unlike others, is doing great. Don't let the fake news convince you otherwise.
in banks. And what we have here, the blue line, is the relative performance of banks versus utilities. Banks very, very sensitive to downdrafts in the 10-year yield, which is our orange line. So that relative performance, you can see banks just collapsing as yields collapse, taking down the banks with them on a relative basis versus utilities. And that's a big reason as to why the Russell 2000 is underperforming the Russell 1, because of the disproportionate weighting that we have in the banks for the Russell 2000. So as long as Treasury yields continue to decline, banks are likely to decline, and the Russell 2000 is likely to continue to underperform, which you can see right there.
It's about 25% weighting or so to banks?
It's about 18% now, but because they've come down.
Because it's fallen so much. And,
Right.
and what are the other big sector weights and opportunities therefore in the Russell?
Well, you've got tech, you've got healthcare. Those are the other two. So healthcare actually tends to do very well when the curve is inverted. So we're looking at healthcare, particularly the life science tool names, particularly the suppliers, particularly the services. Those look great to us.
And Jeff, I know you watch these things very closely. S&P 2847 today. What are the key levels?
2730 is a key level. The good news is put calls have started to spike from a sentiment perspective. We had a huge TRIN yesterday. TRIN is an internal measure. It was the highest that we'd seen since 2015. That's usually in the zip code of some type of near-term low. So we think we're in the process of hammering something like that out to give us a bounce. That bounce will be important. If there's no momentum to it, it's probably a bigger top. If there's momentum, it's a consolidation and we go higher.
There we go. Jeff DeGraff, thanks very much. Great to see you.
Som na caixa aí, mané. Então tá, é o seguinte, vamos encerrando. Tava aí acompanhando as notícias lá dos Estados Unidos, e foi o pior dia aí de 2019, né? Na bolsa americana. E vamos ver de noite as notícias, né? Mas a gente já teve, já rolou aí, já aconteceu, né, o fato, e ficar atento aí amanhã, pode ser que exista uma continuação da queda, né? Se não, pela análise aqui, tentar fazer uma análise meio rápida aqui para a gente encerrar hoje o dia e mais ou menos mostrar o que vai acontecer. Normalmente como é que eu faço uma análise assim do que pode acontecer, né? É com base no Renko 101, ou não é essa coloração. A coloração que eu uso é a SAMURAIS, essa aqui, né? E eu vou apagar tudo aqui para vocês verem melhor. Esse candle aqui, ele foi um candle de tentativa de frustrada aqui. Eu estou no Índice, então não dá para analisar aqui. Eu tenho que ir no Índice, tá? Então vamos alterar. E aqui sim, vou tentar fazer uma análise. A gente já tinha feito hoje mais cedo, né? Eu marquei que tem esse espaço aqui para cair, né? Já tinha marcado aqui esse quadradinho, vou deixar em vermelho aqui, ó. Até 97.500, mais ou menos, né? Isso é próximo, né? A gente tinha analisado esse vácuo aqui, tem uma região ainda aqui comprada, né? Pode segurar aqui embaixo, onde seria o ponto esse bate-volta aqui, né? Desse fundo e o topo, né? Então ele está entre já chegou a dar uma entrada nessa região hoje, né? Que foi aquela hora que começou a despencar e voltou. Bom, o que me chama assim, por enquanto, a gente está notando que ele tentou fazer um pullback e não deu, né? Quanto maior é o pavio do gráfico desse Renko de fúcsia, maior é a probabilidade. Normalmente esse Renko aqui com pavio, ele tem entre 1.400 e 1.500, seria o máximo, né? São 3 níveis. Então aqui ele está dando uma distância de 1.000, tá? Tá faltando mais 500. Então para mim aqui é um sinal fraco de tentativa de recuperação. Tá? Se ele conseguir romper aqui, eu não sei se ele vai pegar esse rumo aqui de novo tão fácil nas próximas semanas aí. Tá? Eu acredito que ele teria que cair de novo mais uma vez, ou subir e voltar a cair. Tipo, que nem foi feito aqui, ó. Presta atenção aqui, ó. Vamos ver, eu estou tentando achar eu vou limpar tudo, tá? Porque isso aqui, só de olhar eu já sei, não preciso deixar desenhado. Então aqui, ó, é aqui, tá? Que eu vou mostrar, ó. Então, notem, eu vou dar um zoom aqui, vou centralizar, né? A bolinha tá aqui, ó. Vou tentar mostrar aqui para vocês essa região, ó. Então, o que aconteceu? Esse renco, ele foi muito pequeno, 1000 pontos, ó. O que tô achando que vai acontecer, né? Que ele vai subir e depois vai fazer um desse aqui para tentar fazer um mais fundo aqui, ó. Que é lá no 97, tá? Então, mais ou menos seria essa a minha visão de maluco aí. Né, com base no que a gente tem visto no mercado aí. Então ele vai fazer esse sinal aqui, né, uma tentativa de voltar, mas ele é uma tentativa falsa essa, né, na minha concepção. E daí ele vai subir, no caso aqui, mais 500 pontos acima disso aqui, para fazer ele voltar tudo de novo e cair. Do jeito que está lá agora, vamos ver aqui, ele pode também, né, ou seja, ele poderia subir até aqui, ó, e voltar a cair, que é isso que eu estou falando, né, mais 500 pontos, daqui dessa altitude, né, ou até subir mais, para depois voltar a buscar o 97, tá? Então pode ser tipo assim, vai dar uma chicoteada, uma enganada na torcida aí, tá? Ó, aqui ele foi até aqui, ó, e daqui ele voltou. Tá? Então pode também ser esse desenho aqui, ó. Né, ó. Esse mesmo desenho ele pode estar querendo fazer aqui. Então ele caiu, fez uma tentativa de pullback falsa, né? Voltou a cair. Tá? Porque esse tamanho de pavio não tem força para e nem fez também assim, ele até fez um fundo, tá? Mas ele está abaixo da média de 200 aqui e está muito próximo do patamar aqui, da onde ele precisaria cair para pegar mais fôlego aí, tá? Então não acredito, só se entrar dinheiro americano aí, alguma coisa acontecer nesse sentido, mas fora isso agora ele tá bem complicadinho, tá? Ele vai talvez se bater aqui, pensar numa compra daqui para cima, né? Aqui seria o prior quote dele de ajuste, ó. Aqui o pivô dele, ó. Olha só, o pivô tá aqui, ó. A VWAP semanal tá aqui. E aqui tá o que? Tá a resistência da 66, a zona de fuga. E aqui você tem o que? Aonde ele começa a ficar para alta. Hoje, né, nessa análise agora, nesse exato momento, é aqui, ó. Compra boa é aqui, ó. 104.500. Daqui para cima vai bombar, tá? Então, tipo assim, anota aí, né? Porque 104.500, né? Pode ser que mude aqui amanhã, mais para frente, seja mais aqui embaixo, né? Conforme o mercado vai movimentando, a gente vai tendo que mexer. Mas no momento, assim, o que eu posso adiantar é só no 104.500, tá? Que eu compraria. Assim, com mais tranquilidade. Aqui, por enquanto, meio que foi pro vinagre aí, tá? Se você pegar aqui, a rainha tá no castelo e ela quer sair do castelo, né? Só que a porta tá fechando. A porta do castelo, né? E aí, ó, o castelo dela, ela tá lá em cima no castelo, na torre. Tá bem poluído aqui, né? Difícil de mostrar aqui. Deixa eu ir num outro aí, se eu consigo pôr um mais clean para vocês. Para brincar de montanha da rainha. Aqui a gente vai colocar automático. E aí depois vou colocar o candlestick para poder pôr a barra. Então, com base no Renko 101, tá? É que eu consigo ver, né, o que vai acontecer. A média de 200 perdeu. Aqui tem uma resistência forte aqui, ó. Né? Aqui toda essa região, essa é uma zona de fuga, tá? Aqui, ó. Isso aqui é a zona de fuga. Daqui, deixa eu só ver. Daqui até aqui em cima, né? É tudo uma região bem complicadinha de passar isso aqui agora. Porque o preço tá abaixo, né? Então tá mais perto de fazer um fundo que é saudável para voltar para, né, para poder continuar aí então, mas vai dar um baile aqui, tá? Isso aqui não vai ser, talvez, não sei se vai cair amanhã. Se cair amanhã é melhor, que já resolve essa parada, mas se ficar aí uma semana aqui, complica. Para mim seria bom que fosse até aqui e já resolvesse a volta aí para poder seguir o caminho, né? Que é o que vão tentar fazer. Daqui, ó, para cima melhora um pouquinho, mas assim a virada mesmo é aqui, né? O preço voltando aqui para cima, ele volta a ficar na tendência de alta, né? E o preço aqui acima nessa região e aqui, né, fica mais sustentável aí, tá? Então cuidado aí, porque não tá muito bom aí na compra, tá? Não vejo muita compra aí no momento. Então tem que... Todo cuidado é pouco, porque ele pode, aquilo que eu falei, ele pode daqui agora voltar a cair, ou pode dar uma subidinha para depois voltar a cair. Aquelas duas situações que eu mostrei aí para vocês aí. Tá? Não vai precisar tirar daqui para mostrar, né? Tá muito poluído, mas... Acho que já entenderam. Eu vou voltar lá. Eu estava usando aquela coloração, a Game Forever, tá? Essa aqui. A coloração Game Forever, ela é muito boa. Por isso que o nome é Game Forever, tá? Tem disponível lá no backtest, no grupo da Nelógica lá no Facebook. Só procurar lá em buscar e por lá digitar o nome Game Forever, né? Quem não sabe escrever tem que primeiro fazer o curso de inglês, daí depois para ir lá se inscrever, senão não vai conseguir. Mas põe Alexx Scalper tudo junto ou separado, que acho que aparece alguma coisa lá. O que tem do Alexx Scalper vai estar lá. E aí aqui ele mostra, vocês têm que usar o high-low aqui, ó, 66, tá? Sempre. Tá? Sempre é o high-low 66, né? E a média de 200, tá? E aqui nós temos duas médias, as médias de 15 exponencial com deslocamento de 3 e média Wallace Wilder de 4 com deslocamento menos 3, negativa, tá? 3 negativo. Então ele vai, a Wallace Wilder vai te levar para o caminho do gain aí. Tá? Quando a Wallace Wilder fica assim, ó, muito lateral, se entrelaçando, né? Aqui, ó, aqui, por exemplo, ficou meio para lá e para cá, para lá e para cá. Então aqui é uma consolidação, uma lateralização. Quando ele vem de baixo e fura o high-low, a probabilidade é maior dessa continuação para cima, né? E para baixo. Então no caso aqui a high-low está aqui, ó. Então por que eu tô aqui tá desenhado que daqui vai subir? Porque eu já sei. Se o preço romper essa high-low 66, vou começar a comprar, né? Então o que está acontecendo com o preço? O preço está abaixo. Então enquanto a média Wallace Wilder não cruzar a média de 15, continua-se na venda. Tá? Então é bem simples mesmo. E quando você colocar isso aqui é o índice, tá no ranking 101, hein? Imagine. Agora nós vamos colocar no 6R isso aqui, ó, que é o que a gente faz para tradear, é a mesma coisa. Onde que está o preço aqui? Para baixo. Agora cruzou aqui, ó. Então aqui era uma compra. Ó, eu pegava 127. E se cruzar aqui, ó? E se cruzar aqui? Isso aqui é uma palhinha que eu tô dando aí para vocês. Se cruzar aqui, ó, vai ficar bem comprador. Tá? Bem comprador. E aonde eu vou? Até onde eu vou nessa compra? Aí é que tá. Você tem que saber suporte e resistência, Fibonacci, Price Action, tá? Então não é a coloração, não vai ser só confiante assim, bem confiável, ó. Eu vou fazer aqui, ó, um canal. Deixa eu apagar tudo, peraí. Deixa eu apagar tudo, senão complica. Eu vou usar o estocástico, tá? Eu vou fazer um risco aqui, né? Vou fazer um risco aqui, que eu tô vendo que é um canal. Tanto faz fazer com as duas linhas, com uma e uma, tá? Que eu tô, às vezes, eu vou enxergando aos poucos as coisas, entende? Então aí vou marcar os pontos de suporte e resistência nos 60 minutos, mas aqui eu já sei que aqui tem ó, aqui fica bem fácil de ver, né? Que é mais ou menos até onde parou aqui, ó, né? Tem uma aqui no 2 minutos, tem aqui uma máxima, tem uma máxima depois aqui, depois ele vai ter um suporte aqui, né? Nessa região aqui, ó. Um suporte não, uma resistência, né? Depois ele tem uma máxima aqui, né? Aqui até dá para jogar essa linha um pouquinho mais para cima aqui, ó. Tá? Então é mais ou menos isso que como eu enxergo o mercado. É price action, né? Análise técnica, gráfica, teoria de Down, Fibonacci. Sempre foi isso, sempre foi passado isso para todo mundo aí, né? Então, por exemplo, eu vou tentar aqui definir se isso aqui vai continuar subindo ou caindo. Né? Eu posso usar o de 60 minutos, já vou explicar sobre a coloração. E aí eu vou tentar... O bom mesmo era usar o de um dia, né? O diário, porque daí... Vamos ver se eu consigo fazer pelo diário. Aqui, ó. Então, por exemplo, para fazer uma projeção. Então, se subir, né? Aqui a projeção, ó, seria essa projeção aqui, né? Para cima. E para baixo é o contrário. Para baixo eu vou pegar daqui, vou pôr aqui, vou pôr aqui. Para baixo é aqui. Que a gente tinha falado 97.500, então ele está próximo aqui, ó, né? 97.350 nessa região aí, ó, tá? Isso com base no dia, tá? No candle do dia, tá? É um método para se calcular. O outro, você pode usar aqui o topo, né? Você pode só um pouquinho usar a retração, você pode usar esse topo até aqui, mas não está dando. Agora deu. Ó, deu ali 97.700 aqui, ó. Ó. Né? Entre o topo e a mínima aqui, sempre a última, né? Não é do ano inteiro, nem do ano inteiro, nem do 10 anos atrás, não é isso. E aí ele vai bater aqui mais ou menos próximo, ó, 700, 350, é essa região aí, 500, 97.500 que ele vai tentar buscar, tá? Não vejo, é bem próximo aí, tá 98, tem a média de 200 aqui, ó, no diário, né? Quem usa semanal para ver um pouquinho mais ou menos é isso aqui que tá vendo, ó. Depois tá projetando aqui, ó, né? 96.500 ainda. Pode acontecer. Está aqui projetado, o 200 está buscando aqui. Então, pode acontecer. O Fibonacci está aí. Está desenhado. Né? Tanto no semanal. E aqui para cima é isso aí. Né? Para cima está também feito aí. Então, a gente faz um monte de risco e acontece essa bagunça aqui. O cara não entender, né? Não vai saber como vai fazer as coisas. Né? Por que existe Fibonacci? Esse é o método mais básico também que eu estou mostrando. Tudo é básico aqui para vocês não complicar, tá? Não tem várias outras maneiras de ver o mercado, mas ó, o semanal aqui, ó, se ele na semana, se ele bater aqui, já era, tá? Isso aqui vai despencar, ó. Se passar daqui, ó, 90 mil, né? Nós estamos falando 90 mil, ó. Então, vai aqui, tá? Sinto muito, mas vai aqui, vai no 80 de volta. Então é isso, e isso, não sei, eu não posso dizer nada, mas os estudos me dizem 97.500 e 96.500, só. Né? Depois, acho que é difícil, muito difícil, né? Acho que a economia está dando um susto aí, só, por enquanto. Então no diário é isso aqui, e quando você bota no 6R, né? Eu tinha feito um monte de risco lá. Quando você bota no 6R, acontece isso aí, ó. Aqui ele ia bombar, mas como é final de dia, tá acabando o mercado, né? Não foi, né? Então, é óbvio que não tem como... Mas amanhã, se ele for para cima, né? A tendência pode ser uma comprinha. Daí você marca os pontos de suporte e resistências. Né? Um fundo aqui, se ele romper de novo, ele tentou aqui, ó, bem aqui, bateu aqui, ó, certinho, ó. É bem fácil, não tem erro, né? Aqui você tem um topinho mais forte, depois um topinho de euforia, você entendeu? E aqui é o miolo dele, então ele vai ficar tentando trabalhar aí. Aqui, se ele romper isso aqui, ele vai para cima, tá? Daqui até lá, né? É isso aqui, mais ou menos o percentual do meio, e se ele romper, né? Aqui o 38, ele vai fazer essa sequência aqui, ó. Né? Então o Fibo tem que meio que botar a cabeça para trabalhar. Então eu tracei um Fibo aqui desse suporte, mais ou menos um suporte, um fundo aqui, né? Poderia também traçar lá de baixo, mas eu tentei pegar um menor movimento, e para poder localizar aqui, né, ele pode romper aqui e até aqui em cima, voltar, ou vai aqui no 100% e depois ele vai buscar lá, ele vai fazer vai fazer nas ondas. Então por isso que às vezes o 61 encaixou no 38, ó. Note aqui, ó. Né? Coincidência ou não. Mas aqui você também poderia daqui até lá embaixo, naquele outro suporte aqui, ó, para ver o que vai acontecer, ó. Né? Para ver aí, ó, bateu no 38 com o 38 desse aqui, ó. Né? Outra coincidência. Né? 2,38 e altitudes diferentes. Né? Então tá bem caracterizado que aqui nesse nível 0, rompendo aqui, né, ele vai fazer essa caminhada aí, e para baixo, né, essa caminhada aqui, aqui. E também você pode fazer, né, se quiser fazer daqui também até aqui embaixo, também dá, né, vai coincidir muito próximo, ó, o 50 com o 61, o 38 com o 50, tá? É que não está bem coincidindo porque eu tô fora lá da range lá, mas vamos arrumar aqui, ó, que você já vai ver que vai bater. Aqui, ó, vamos tentar bater, né, fazer bater. Acho que é aqui mesmo, né, onde estava ali. É que tá dando uma diferencinha mínima ali, mas é aqui, é nessa região aí, ó. Aqui tá um espaçozinho ali. Tá, então é bem tranquilo, né? Cada Fibo tá batendo, respeitando a altitude aí. Aí as projeções também você faz. Essa coloração aqui, ela é bem legal, é bem prática, e para os indicadores, você forma uma opinião e toma atitude. Tá? Essa aqui é a coloração Game Forever, ela é bem interessante, bem interessante. Ó, ela pega uma tendência, né? Várias tendências. É trade para você deixar rodando. Aonde você sempre sai, né? Está vermelho, abaixo da 200, cruzou, vende. Vendeu, vai sair ou aqui ou aqui. Quando o azul claro cruzar a média de 15. A mesma coisa aqui, verde, acima da 200, trade de tendência. Tá? É bem... Aqui ele até ficou enganando, ó, mas depois ele tomou o rumo. Deu 635. E aqui também, se você ver aqui, ó, abaixo de 200 vermelho, cruzou aqui para baixo, ó, deu sinal de venda e vem embora. Até aqui, ó, deu 1000 pontos certinho. Onde sairia aqui. Primeira tocada na média de 15, você sai embora. Tá? Então é assim que funciona. Foi explicado aí, vou deixar aí. Acho que não teve música, então acho que não vai ser bloqueado o vídeo. Tá bom? Então um abraço a todos, uma boa noite. Até a próxima oportunidade aí. A gente se encontra. Fique com Deus. Um abraço aí, Fabrício, Oliveira, alguns aí que entram, não sei. Tchau, tchau.